Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, January 19th, 2024. I am Frank Ochoa, aka PivotBoss. A big bounce back after the previous session here. Price bottoming out here on Wednesday, finding a way to stretch it big time here to the upside back toward the previous year's close, and now here pre-market heading into the RTH Open, seeing a ton of strength heading into the RTH Open yet again. Approaching the previous year's highs, perhaps tapping it right now. And again, this market has been mostly range bound to begin the year, back and forth, but really hasn't tested any prices beyond the previous year's highs just yet. This will be the first foray through that level. You can clearly see this market continuing to hold on to its trend. The check mark move that happened to finish Q4 is, for the most part, still in play, especially after some compression here. You have the bullish PIMA trigger zone that continues to be defended, and the previous month's midpoint still in play as well in terms of holding as support. Right now, this market approaching those highs and could make an upside break and a continuation up ahead. This could easily lead to a continuation toward the 5,000 level. That's the next major key level up. You have 4,600 here. 5,000 is the next 400 distribution up. We've been consolidating right at the center of that range. We could see a nice continuation to the upside if a strong breakout occurs from this range. And that's the big operative word right now, is if. When you're this range bound, at times there is a tendency to push to the upside and then fail back down and then continue to expand this range. As of right now, we're not really seeing any really bearish rejections at these highs, so hard to fade into this level here unless you see a strong rejection. Instead, this market remains quite bullish here. We've seen an overnight trend that has taken us higher. Again, if there is some sort of break that happens to the upside, the last thing that bulls want is for that break to lead to some sort of failure and rejection. A hard rejection up here could lead to another swing back down as it continues to develop. It could also lead to a broader pullback. But as of right now, this market remains quite strong, testing the highs at the top of this narrow range. Do we get a breakout finally from the narrow range, or do we continue to develop? That's going to be the key question here. So continue to watch that 48.50 zone here to see how we respond into that level. If we take a look here at the NQ, this is the one driving so much of that strength right now. A big time push to the upside here, a little bit of a pullback, narrow range, and then the previous session here with a huge stop run day up. Today, very bullish overnight and pre-market strength here as well. New highs through the 17,245s now, and again, the uptrending market mostly in play still, and now breaking to the upside. Again, as we mentioned before, if this thing were to break to the upside in big fashion but fail by the end of the day, that could lead to a higher high failure that is fadeable. Until then, this market trending up, testing new prices through those highs, and if we did see some sort of full-on expansion here after holding the midpoint of the previous month, we could be looking at a 25-50% extension into new territory up above. So you're looking at about 17.9 that could be up ahead, 18K. This could be a tremendous breakout move if we can see a continuation and a hold of the breakout point. Again, that's going to be up in the air to see if we can get that going. But as of right now, tech leading higher, new highs, and continuing to maintain this trend that has been in play since Q4. So very strong here. Again, if there's some sort of major failure here and we close back below 17K for some reason, that'll be a hard higher high failure and could swing us back down within the range. But until then, things are remaining quite strong. Taking a look here at crude oil. Crude oil got a great checkmark day up in the previous session after a bit of a failed new low on Wednesday. That's a pretty good move there that transpired over 2 sessions. Today, new high above the previous session's high, coming just shy of 75s here, but now finding a bit of a rejection here today. A bit of a box up there above 74.40, and then a big sharp reversal back to new lows. So again, this kind of demonstrates that crude oil remains within the trading range here and just is reluctant to really see expansion just yet. Clearly building energy, and again, seasonality would take us higher in the first couple of months of the year, and so far for 3 straight weeks we've gone mostly sideways, but just above the previous year's close as well. So that level has been defended. So it's sideways but marginally bullish above the previous month's mid. Can we eventually get a breakout? As of right now, failed new high here could pull us back into the range as this thing continues to build energy. Until then, this thing continues to remain choppy and range bound, but the energy is tremendous. I mentioned 10 to 12 points of expansion, but it could be much more than that when this thing's ready to go. Eventually, a breakout move will look like a 4+ point day, and it'll be through the highs, for example, and trigger a move into, say, 84 to 86 up above. For right now, previous session's high providing resistance as this market remains mostly range bound. Let's take a look here at gold futures. Gold up about 0.9% right now. This thing having trouble going down in a straight line at the moment, continues to be mostly range bound within the boundaries of this larger impulse move we talked about before, this super wide sell-off, and then the surprising bounce back to the midpoint was likely going to keep prices in check for a while. That's been the case, but we have had a downward bias, a downward trend that has resulted so far this year. We're currently in the counter trend bounce phase of that move, and overall we're still staying kind of in the middle portion of that larger key range. This is building some energy as well. It's been again trending downward. We're on the counter trend phase here. Perhaps we can see a test at the edge up ahead. But from a short-term perspective, though, headed higher at the moment. Not really finding acceptance above the 2070 level, though. So while we are bouncing, not expecting anything tremendous to really push us up just yet. Instead, trending down with the potential to go test the 1986 level down below, which is the key range low. Lastly, looking at the YM. YM's up about 0.5% right now. This one really snapped back nicely, especially behind the strength of tech here. You can see this thing was lagging behind the entire week here, and then found its sea legs late in the session yesterday, busting back above the previous week's low and rallying a good 3 hours to finish the day. We're now moving back up within the range, and again, this is about as narrow a range as you'll see in the YM over this amount of time. I mean, this is 20+ days of compression. The range is all of 700+ points, and the potential breakout expansion move of this range could be well north of 2,000 points when it's ready. Until then, again, this market moving higher toward the top end of the range. Can we get expansion, or do we continue to develop this range? Again, this market remains quite bullish. It continues to hang on to the trend that was developed here in Q4. Very bullish trend, holding on to these gains, maintaining the LVN in the previous month's midpoint. Not really expecting a tremendous breakout just yet because we haven't really seen that, but we are moving up within the range, and a test at the edge could be seen ahead. Again, at some point, a breakout will be a high range day, maybe perhaps a rejection day before a breakout, but we're not seeing that type of price action just yet. Instead, moving higher within the range, we'll see, can we reach the edge at around 38.1? That'll put us at a new high here for the year. So moving higher within the range as it continues to develop this narrow compression. Eventually a breakout could trigger a move well beyond 2,000 points over a monthly period. So continuing to watch this range as it develops. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.